Stocks plunging, VIX spiking. I didn't show the VIX, but we were up like 10% on the VIX. It's also a back-to-back day of gains for the VIX, a back-to-back day of losses for the indexes. It's looking pretty bearish.
Yeah, and we think there's more to come. Our refrain here has been that implied volatility has been low in U.S. equities since January. There hasn't been an inversion of any kind in the VIX futures curve since then. That's 4+ months. The prior long was about 3.5 months. So we've ticked off these weeks where we've argued for increasing instability. Now you've got FOMC this week, obviously Greece escalating. So certainly some ingredients in place to drive up U.S. equity volatility in the near term.
So how far does it go? I mean, how high does volatility go? We're looking at a 15 reading right now in the VIX.
I think low 20s at least. One metric to think about, V2X is Europe's equivalent of our VIX. It's up at 27. Historically, the spread between the two is about 5 points. So that would put us into the low 20s. But net, when we get that volatility blow off, we'll know it, we'll feel it. We did have spot VIX intraday above 30 last October. So, it's worth thinking about tail. We really think, though, that spot VIX will get into the sort of low 20s, sub 25.
So it could get back there. Listen, one of the deals, and there are a lot of interesting little deals going on today, but one that I've been thinking about a lot is Standard Pacific buying Ryland Homes. You have a play on home builders as it relates to the implied volatility of a couple of ETFs.
Right. So interest rate volatility, U.S. Treasury volatility has been elevated for some time, near multi-year highs. You can look at the MOVE index that shows that. Typically, that's well correlated with both the REIT ETF, which is IYR, and the home builder ETF, XHB. What's happened here is...
In what way are they correlated?
Implied volatility. So usually the implied volatility of XHB and IYR moves pretty much in unison with the MOVE index. What's happened here is we've had a significant divergence. IYR volatility is near one-year highs. XHB volatility is sitting on all-time lows. We think even with this deal today, we could see higher implied volatility in XHB. That suggests downside in the underlying.
So how do you actually play that? I mean, do you sell XHB or...
A simple way to play it would be just buy XHB volatility. That can be as straightforward, for example, as going out to July 31 expiration, buying XHB 31.5 puts outright. So you're short XHB and you're long volatility. Another way would be a volatility pair. That would be to buy a straddle, for example, in XHB. You're buying a put, you're buying a call. You're long volatility versus being short volatility in IYR. You sell a straddle there. A little more complicated, a vol pair. A simple way is long XHB puts.